In 1790, the entire U.S. national debt stood at just $70 million, similar to the size of a small tech company today. Fast forward to 1980, and that number hit $1 trillion. So it took the government over 200 years to reach its first trillion in debt. Since then, it took only 45 years for debt to rise to $36 trillion. What used to be 200 years worth of debt accumulation is now done in the space of just 4 months. In the past year alone, the US government has added over $3 trillion in new debt. This is reshaping the entire financial system and affects not just traders or investors, but also savers, retirees, and wage earners. This chart shows us in real time the collapse of the value of our currency. Bitcoin was founded in 2009 with the goal of protecting people from this exact phenomenon. The question now is whether it can actually serve this purpose. To answer this, we have to understand what this currency devaluation actually looks like. In the 1920s, a typical home in the US went for $6,300. Today, that same home averages around $420,000. A dozen eggs went for 13 cents back then. Now, it's shot up to $6.20. And a loaf of bread went from just 5 cents in the 1920s to $2.80 today. The products haven't changed much, but the dollar's value clearly has. We can also see this through the long-term chart of the US dollar's purchasing power. In the last 100 years, the dollar has lost 97% of its value, and in just the past 5 years, it's lost 20%. Meaning, if you saved up $100 in 2020, it now only buys you $80 worth of goods. So everything now requires more dollars just to buy the same quantity from a few years ago. But the real damage to the dollar's value often doesn't show up properly in the official data. In fact, a lot of people feel like they have lost more than 20% of their purchasing power since 2020. The reason for this is that government metrics tend to downplay the impact by averaging out a wide range of goods and services. For example, the official inflation number might show 2 or 3%, but the actual rise in everyday expenses that the average person experiences is often much higher. That's why we like to look beyond just the reported numbers. An alternative way to assess the loss of purchasing power is to look at the price of gold. In US dollar terms, gold has gone up by around 1,250% over the past 25 years and more than 200% in just the past decade. That kind of performance points to a much deeper issue, one of steady erosion in the value of fiat currency. Gold is a great inflation gauge because it acts as a timeless benchmark. It gives us a neutral way to compare the price of everything we can buy, like groceries, housing, petrol, to something that has kept its value for thousands of years.